Hey everyone, Gerard here. So as schools open up for some form of face-to-face classes, I want to discuss the different classifications of educational institutions and their tax obligations based on Revenue Memorandum Circular number 78-2022. So the RMC classifies educational institutions in three main categories. The first one is proprietary educational institutions. Now, in the past, there has been confusion on its tax treatment, mainly because of Section 27B's mention of proprietary educational institutions and hospitals prior to its amendment. It has then been clarified under Republic Act 11635, which now clearly indicates the preferential tax rates of proprietary educational institutions, including those that are stock and for profit, along with non-profit hospitals. Proprietary educational institutions are private schools maintained and administered either by private individuals or groups with an issued permit to operate from the Department of Education or the Commission on Higher Education or Technical Education and Skills Development Authority. So, for example, can a review school organized as a domestic corporation be granted a preferential tax rate of 10%? The answer is no if these proprietary educational institutions are not issued a permit to operate by DepEd, CHED, or TESDA. These proprietary educational institutions could be organized by a domestic corporation or others that are organized by individuals or corporations other than a domestic one. For proprietary educational institutions that are domestic corporations, they are subject to 10% preferential tax rate. But beginning July 1, 2020 until June 30, 2023, the tax rate would be 1%. This is to give educational institution a recovery period from the effects of the pandemic. Now, for proprietary educational institutions, in order for them to avail of the preferential tax rate, their gross income from unrelated trade, business, or activities should not exceed 50% of the total gross income derived from all sources. Otherwise, Section 27A will apply, which is 20 or 25% corporate income tax, whichever is applicable. For example, a proprietary educational institution organized as a domestic corporation has 100 million total gross income for the taxable year. 60 million gross revenue came from unrelated trade. What tax rate should be used by the educational institution? The answer being the unrelated revenue of 60 million is more than 50% of the total gross income. It is not qualified for 10% preferential tax rate and thus will be subject to 20 or 25% corporate income tax, whichever is applicable. To further elaborate, unrelated trade, business, or other activity means these are activities that is not substantially related to the exercise or performance of the educational institution of its primary purpose or function. Lastly, if the private school is maintained and administered by an individual, then it would be subject to the appropriate individual income tax rates. And for other corporations that are not classified as domestic corporations, will be subject to tax on resident foreign corporations, which is 25%. Now we can go to the second classification, which is government educational institution. So as the name suggests, these are educational institutions that are fully subsidized and owned by the government. GEIs, for short, are created through a charter or law passed by the Congress. So with regards to their tax obligation, they are exempted primarily if there is an express mention in the school's charter or law. If there is no mention, they are still exempted from taxes under Section 30 of the Tax Code as amended. For example, in the charter of a state-owned and organized university, it did not mention any tax exemption. Is the university subject to income tax? The answer is no. In the absence of an express mention in the charter or law creating the government educational institution, it is still exempted from income tax under Section 30 of the Tax Code. The third and last classification mentioned by the RMC is non-stock, non-profit educational institutions. So these are also institutions issued with a permit by the DepEd, CHED, or TESDA. Just like government educational institutions, they can also enjoy tax exemption under Section 30 of the Tax Code, provided if the income generated is actually, directly, and exclusively used for educational purposes with factual proof of such. And of course, being non-stock, non-profit institution registered under the Securities and Exchange Commission, no income or asset should accrue to any member of the corporation in the form of dividends or any similar nature. So, for example, a non-stock nonprofit university had rental earnings from restaurants, canteens, and bookstores operating within the campus. Such earnings were duly substantiated with proof that the earnings were actually, directly, and exclusively for educational purposes. Is the earning subject to income tax? If the university qualifies as a non-stock, non-profit educational institution and the earnings are actually, directly, and exclusively used for educational purposes, the earnings are not subject to income tax. And that's it. So as always, the reference of this video will be in the description below. So if you found this video very helpful, please give it a thumbs up and make sure to subscribe and hit that notification bell because it helps me create more videos like this. So this is Gerard. I'll talk to you in the next one.